What's up, guys? Brendan from Market Makers. Pro Trade video midday update. Couple hours left of trading. Everything is up. Dow is up. SPX is up. Russell 2K is up. Bitcoin's up. Everything's up. Guys, what's going on in the marketplace? Let's cover some news real quick because the economic data from November is rolling in, okay? Retail surveys came back. The Black Friday shopping holiday, which is huge in the US, our international friends may not know that. Huge in the US, it is 28% lower than 2019. Nobody counts 2020 because of COVID. 28% in-store shopping, minus 28% lower than 2019. Cyber Monday, the first time ever recorded since they started keeping stats on it in 2012, it was lower than last year. Cyber Monday sales, okay? The economic data came in. The U.S. added less than half the projected jobs. You're supposed to add over 500,000. They only added 210,000. Unemployment ticked up 0.02%. So what is going on in the markets? Guys, not even to mention the Fed meeting, which nobody actually knows what they're going to say. There's a lot of people guessing, making educated guesses. Nobody really knows what they're going to say. That Fed meeting is a week away. So why are the markets pumping? Well, my friends, I will tell you, the largest ever recorded inflow of retail investor money buying what they call the Omicron dip. Largest inflow of retail investor money ever recorded. Now juxtapose that with the largest amount of CEO selling ever recorded, $69 billion this year, ever recorded, is leaving the market. I gave you some of those highlights before. Obviously, Elon Musk and Bezos, CEO of Microsoft, lots of different CEOs dumping huge portions of their portfolio into the market high because you got to sell when there is demand. You have to dump supply that it can be absorbed by demand. So retail is buying up this Omicron dip, they're calling it. Is this a smart move? Well, my personal thoughts are now is not the time to be entering near the all-time highs of the market. Too many unknowns. The Fed meeting is an unknown. How the market will react is an unknown. Clearly, the insiders seem to think there's some issues in the marketplace. And when you look at things like retail sales, when you look at the flat estimates for GDP growth, when you look at these things going into next year, guys, it looks shaky. And I've given you this analogy before, but if you have a marble statue and a hammer and nail and you keep chipping away at it, eventually you start breaking off little pieces, right? And this dump, you could say, was a little piece. And then you start chipping off bigger pieces. And that's where we're at. I've consistently said we could make new all-time highs before the end of the year, but pieces of the statue are beginning to chip off. And at some point, you're going to see a correction, which is a minus 10% move in the market. So right now, the Dow from peak to trough has dumped just over 7% when we started shorting it back on November 8th. So, and we have recovered now 5.5%. So we were just about back to where we were. So this is something really to pay attention to. How long will this hold up? Will this just start to roll over? We need to pay attention to the Dow, the SPX, and the small caps as well. Let's look at the SPX in the weekly. Here is your all-time high. Your all-time high, 47.44, and we're at 46.87. Really not that far away. I personally think it'll be interesting to see if we hold up in this range. We could easily retrace back down to the bottom of the Starbucks box because, guys, again, you're near the all-time high. I know it's really exciting for retail to see stocks that they've been following, like Tesla, that's been selling off a little bit. We shorted it in the room. Some of these stocks sold off a little bit, so they think they're getting good buys, but you could be buying very, very close to the top, which, as you know, can be a very dangerous thing with bad economic data and potential pandemic outbreak type news, okay? Always things to consider in any marketplace when you're entering a market. So looking at the weekly, we tested the moving average, and that's really all that happened. Then we have this parabolic candle back up on the weekly time frame. Let's go ahead and zoom in on the daily. As you can see, I said we have to hold this trend line, broke out of our Darvis box, and again, right up in this range of the all-time high, finding a lot of resistance right here for obvious reasons, because essentially this was price discovery up here. So how much FOMO will come into the market? Will they start pushing this higher, or is this just going to roll over? Because what I see here on the daily, and I know you guys see this already too, but let me go ahead and just grab my paintbrush, turn off the magnet. what I see on the daily already is you could be very easily be doing this, right? There's your trend line. Yeah, you have your candle back up. This could be your second top right around this area and coming back down. And if you break your neckline, you just broke a double top and you would be descending further. Okay, sorry. I know that looks more like Picasso than Bob Ross, but you can see the double top. This would be your first top in a double top. Okay, so this could be your first candle up to start making your new double top or your second top to the double top. So something to watch. And again, we do have the support line. And if you break that neckline, you're doing a measured move. Let's just look what a measured move would be. And again, we don't know where the second top peak will be. So let's just be conservative and let's just take it from this candle. And we know we have our base all the way down here, our white line. So let's take this blue line, okay? This would be a measured move. This is not a guarantee. This is a measured move and technical analysis from breaking your neckline. I mean, you're down at 42.87. 42.87. See, for me, this is very precarious because what you're hoping when you buy in here, what you're hoping is you get price movement, consolidation, price movement back up, just like this formation, maybe along this line even. So you be going like this along this line. Without the data coming out, is it possible? It's possible. Is it probable? I don't think it's probable. But you never know, and that's why I trade. Trade back and forth, my friends. Let's go ahead and look at this in the 1 hour time frame, more current time. Look at our Ichi cloud. We are extended from the moving average. There's the top of our Darvis box. We could very easily, if we do end up just keep printing this top here, as you can see, this is a 1 hour time frame, so it was more current. Right now, you're really just doing a consolidation pattern. Yes, you do have dojis in here. That doesn't necessarily mean trend reversal. They can be continuation patterns. You would need to see a bearish candle, like a bearish engulfing candle, or a bearish harami, some type of Japanese candlestick pattern form, okay? So that's what you'd be looking for there. But just be very well aware, these are very high liquidity candles, okay? If you don't hold up in this pattern, most likely you're revisiting this box down here because these candles will be recaptured on the way down. So you could possibly be lowering back down to here, which isn't necessarily a bearish thing. You could be consolidating, finding more strength for a further move back up. But this is where we're at right now. So your support cloud is way down here. Your 200's down here. So we need to see how long retail can keep this afloat because it is the mass inflow of retail money pumping up into this market. Let me go ahead and drop Ichi off here. Let's look at our DMA cloud. Very, very bullish, as you can see. Let me throw on my volatility bands. Let's see if we're above both of them. Yep, we are. We're green in volatility. When you're above both bands, you're getting big candle movement. The separation of candles is volatility. Easily referenced here with just looking at the size of some of these candles, right? So that's the SPX, guys. Let's go ahead and move on. Russell 2K, they had a nice little reversal. Look at this. You go. So Russell came back above the 200 moving average. It was struggling, clearly hit a top up here, fell back down. It is still in range. I mean, to me, I'll have to draw this out when I get some time. This looks like the classic Wyckoff distribution box, okay? You have a wide range of price dumping and pumping in a sideways fashion. This looks like a distribution box. And guys, after distribution, you go to markdown. And then you can go to accumulation again, okay? So this looks like a Wyckoff distribution box. I'll have to go through and do the whole Wyckoff price cycle on all these markets. It's just extremely time consuming. I did that in the Bitcoin space, guys. If you ever watch any of my crypto videos, I put it in the Wyckoff price cycle. A lot of people like that type of reporting. So yeah, Russell got back up, but again, you're just in this range. You're just range trading in Russell. Obviously, here's your top, but this main range right here, there's nothing in here that interests me. The small caps tend to lead the big caps, and this is holding, I guess you could say, stable, right? Which I don't know what else you could ask for with the meeting coming up with the Fed, and we shall see what happens. And let's see what else we have. Oh, Lucid. So you guys probably saw the Lucid news. Apparently they had an SEC subpoena. I didn't get too far into it. But as you know, I was posting our Lucid trade here on YouTube back on November 30th, okay? So we got a really nice price declination in Lucid. It's moving back up, of course, with the market rebound. And where did we get to? Yeah, 30%. 30% move. Actually, that's not even, let me turn the magnet off. It's more than that. We got from the D down to here. 33% move. Got a 33% move, peak to trough, off my red dragon pattern in Lucid. I also had another bearish pattern in there. Guys, this was an awesome trade. Posted it in the room. And of course, I showed you this the other day, so I gotta update you. Usdchf, we did end up having a nice move. When I first showed this to you, it wasn't pumping yet, but we got a nice move past the 0.5 fib. My Forex brothers out there, you'll know exactly what this means. And guys, this trade was just insane. Posted both of these in the room. Some of our members took their first Forex trade and they chose the Black Swan because why not? It is a killer pattern. And look where this got to. We posted this at the PRZ of the pattern, the entrance point. What a rise for the, what is it, Australian New Zealand dollar. Look at, Magnet is my nemesis in every single chart. Look at this rise. This is absolutely awesome gain. 1.36%. What is it, 140 pips? What an awesome gain. Past the 1272. You know, I was hoping we get to the 1618, but the DXY is just going sideways. It's not cooperating. It needs to come up, try the midline in the pitchfork like we talked about, flip it for support and move up, and then deal with this bearish pattern, which will definitely send you back down, possibly to the midline if you can get up there. Or this could pull down to the midline and you could have a sideways DXY. I think this is consolidating, really waiting on the Fed meeting. I think you're going to see it stay bullish, evidenced by the blue candles here, but it's kind of a bullish sideways fashion because this is an ascending pitchfork. So it's just bullish sideways, but you could see some explosive moves. Who knows? People are going to tell you the Fed stuff is baked into the market. I don't think so yet because nobody knows exactly what they're going to say. Another Pro Trades video tomorrow, guys. Discord link, all the pertinent information, Twitter, everything else is in the video description. I will try to answer your comments below as well. Hope you guys have a fantastic Tuesday. Happy trading.